In terms of aspects that are often omitted by people when they're providing the information to complete the tax return, or if they're completing their tax return themselves, there are two very common ones which HMRC often pick up on, and they are the higher income child benefit charge and student loan repayments. The higher income child benefit charge can apply if you or your partner receive child benefit, and if one of you has income over £50,000. It is tapered. The charge is tapered based on the child benefit received if the income is between £50,000 and £60,000. If your income is over £60,000, then you're likely to end up repaying the full amount of child benefit through your self-assessment charge. Student loan repayments are due on other sources of income outside of PAYE. So if you've got rental income, dividends, anything like that, then you do need to make sure you're completing your tax return based on the fact that you are liable to student loan repayments. HMRC will usually pick it up and they will change it, but quite often you could potentially end up paying penalties for late payment of your tax liability. Overseas income and gains, it's important if you're a UK resident to make sure that you are including these on your tax return, even if tax has been deducted at source from the country in which the asset or the income arises. It's still important to make sure you're including these on your UK tax return so that you can then claim tax relief in the UK for the tax paid overseas. Capital gains and losses should be included on your tax return, and these are often missed because they are one-offs and people can forget about them. Recently they've brought in new rules for the disposal of UK residential property, which means that you need to complete a capital gains tax return within 30 days of completion of the sale of that property. These rules have been in for a while for non-UK resident individuals, but they updated those rules for non-resident individuals so that it also applies to UK commercial property, not just UK residential property. Another important thing to remember with regards to these disposals is that if you complete a self-assessment tax return, you do still need to include that disposal on your tax return, even if you've already submitted a separate capital gains tax return. Going back to pension and allowance charges that were mentioned earlier, these are often forgotten by people. It's often missed by individuals that employer pension contributions contribute towards these annual allowance charges. Anyone who's in a defined benefit scheme also needs to be aware that it's the pension growth within the scheme for the tax year that applies, rather than the actual contributions that are made. These are often quite substantially higher than the contributions that are made, and you need to get these details from your pension provider. This is often the case for NHS pension schemes, civil service pensions, judicial pensions, anything like that. And especially this year, it's important to remember to include your COVID grants on your tax return. This could be the Self-Employment Income Support Scheme grant. It could be the grants that many small businesses were getting right at the beginning of COVID, the £10,000 to £30,000 grants. These are taxable, and it's important to make sure that you're including these on your tax returns.